Warning: the views and opinions expressed in this program are our own and/or those of our guests. They do not necessarily reflect the views or positions of our employers. Viewers' discretion is advised.
People don't care about lying to the IRS. They will lie, cheat, steal, whatever they want to the IRS to save themselves a buck.
A word of caution for buyers and sellers: never go 50-50 on a Q of E between buyer and seller.
I will tell you another thing that I've learned in my 26 years of lending. Nobody sells the cash cow.
Yes, you
Kroge,
can.
we're going to send you some videos now. We're going to make you are going to sit there for an hour.
This
just like,
generation, this younger generation, I'm telling you.
Yeah, it's fun. I'm doing kindergarten through second grade. So basically it's just like babysitting kindergartners and first graders and second graders with lacrosse sticks, because they're never gonna, like, they're learning to catch ish, but
Yeah.
mostly it's going to be ground balls. So it's been fun. It's just, it has been raining in New York for 2 weeks straight. And the ground is saturated. It is nobody can, like, there's no sun. I talk about this all the time. I don't know why I live here, but yeah, it's pretty miserable. And then there's one 20-minute window of sun for Kroge, and he's red as a lobster.
I'm also stressed out, so that's probably part of it as
Oh.
well.
Oh, we're in the same boat, Ryan. I feel you.
Yeah.
BDOs. Have you ever had a borrower bring in like a brother-in-law to do their life insurance? Doesn't end well, does it? We've all been there. When you require life insurance on your SBA loan, it's critical that you bring in a company that specializes in getting these policies in place for the SBA loans. The last thing you want is for life insurance to be the holdup. We all know that's a rookie mistake. SBA Protection Quick Close Life Insurance is the fastest, easiest way to secure the insurance protection that your borrower needs for their SBA loan. Their process is simple, hassle-free, and only takes a few minutes of your borrower's time. No lengthy paperwork, no complicated forms. They even have programs that don't require labs or doctor records for approval. And best of all, you will have the collateral assignment back in less than 24 hours. It's a no-brainer. Go to SBAprotection.com for more information, or email Adam Bergen at adam@sbaprotection.com. Okay, today's episode, we have one of our first, I think we were one of our first sponsors, or at least you've been with us since the beginning, and we've been waiting to have you on. So I'm really excited to introduce Ryan Hutchins with Peak Business Valuation. He's a very good friend of all of ours. So why don't you go ahead and give us a quick intro on yourself and Peak?
Yeah, so Peak has not been around long. So we started in 2018. First focused on SBA business valuations, then got into equipment appraisals, quality of earnings, feasibility studies, and collateral audits. So as of today, we value around 25 to 30 companies a week. Outside of Peak, I love owning businesses. So I personally own a bakery, a pizza chain, American restaurant, 2 plumbing companies, a striping company. And I love business. It's fun. So I love your show because I bought my first business with an SBA loan, and it was a lovely process, and it's a hard one to learn. So it's good for BDOs to learn from you guys.
Was it recent that you bought your first business, or was this like a while ago?
2021.
Oh yeah, that's awesome.
So back when First Internet Bank was still in its young days. So it was
we were
with
still
Eve
cranking them out in
Wilkerson.
21, though. Yeah.
Oh, you were.
Oh, yeah.
So
Well, awesome. Now, you said you own a plumbing business. Do you fix toilets?
we do not know. So the first plumbing business that we bought focused on water softeners and reverse osmosis systems.
Yeah.
And we just bought a commercial plumbing company in October 2024. And it is fun to compare and contrast because the residential side of the plumbing has a cash conversion cycle of 2 weeks, and the commercial plumbing is 30 to 60 days. And I feel like it's residential keeps loaning money to commercial until we get paid. So that's a fun learning experience.
You just got to let that cash cycle catch up. But
correct.
Do me a favor. Don't go out getting any MCA stuff in order to meet that cash cycle.
No, you will love this. So that loan, that deal structure, 60% seller note at 6%, and a family member at 30% of the loan at 9%, and then we put in 10%.
Yeah. Okay.
So, and we don't want to touch any other debt to
No other
fund
debt
working
instrument.
capital.
Good for
Yep.
you, man. That's awesome. And what's the striping business? What's the stripe? Like stripes on the ground, like for parking
That's what I
lots,
was
or are
thinking.
you
Yeah,
putting
parking
stripes
lot.
on like the barber poles?
Parking lot. So there's a new franchise that entered this space called 1-800-Striper out of New York. I think they're in the Albany, Rochester area.
In Syracuse,
And
probably.
it's actually a phenomenal business
Do
model.
people actually live in that part of New York? I
Just
thought
me and
everybody lived
Violet.
down in the corner, down in Manhattan.
At least there's greenery up here. It's all like cement. So wait, painting parking lots, like I watch, like sometimes I'll be like stuck in traffic because like we're redoing the 81 bridge that like connects our entire city. And I'm watching them like paint things. I kind of want to go try it. Not gonna lie. Like it looks like it looks fun.
Yeah. Jordan Sargent is the primary owner of the company, and he posts videos all the time to LinkedIn. So kind of like how you're on YouTube Shorts or Instagram Shorts and you
Yeah.
just get addicted to it. Like I can watch videos of people striping lines in parking lots or pickleball courts or putting stencil
day.
layouts of
So
drive-throughs.
so
And
you can
it's-
actually be entertained by watching paint dry.
Yes, you
Kroge,
can.
we're gonna send you some videos now. We're gonna make you are gonna sit there for an hour.
This
just like
generation, this younger generation, I'm telling you, you guys have an attention span and just can get entertained by anything. You know, it's unbelievable. You guys crack
oh
me
my
up.
god. Well, all right.
But
So let's
that's
go.
awesome, Ryan. All the businesses you own. Being a business valuator, I'm pretty sure you got a decent price for each one and made sure that you did.
He's like, no comment.
It does help.
Yeah.
Does help? Yeah, nice.
Well,
Yeah.
let's get into the process of a business valuation and like how the vendors work with the 7A lender. So, Kroge, when we have a loan and you know we talk about going through the process because we want to educate our new BDOs and seasoned BDOs. When do we engage for the business valuation side of things?
Generally, once we get a commitment letter accepted, once we have a deal in place, you're approved. It's generally called a conditional approval or commitment letter, and it's conditional upon getting the business valuated, getting the commercial real estate appraised, environmental due diligence, all the third party costs that cost you money. You know, once we know we're going to do the loan, and once we put the money on the table, then we start spending money. Then we're ready to rock and roll. We hire guys like Ryan to go out there and make sure that this business that's being acquired fits the bill, that it's priced
Mhm.
accordingly.
So it's like doesn't even really touch your underwriting team. Then it just goes
Oh no, this is after underwriting. Yeah, after the
after.
term sheets, after the term sheets accepted, it
Okay.
goes through underwriting. They approve it. We get a commitment letter signed. That's when we start spending money. That's when we would call up Ryan. That's when we start getting a business valuation.
Well, and it's also fair to your point, Emily. Like in some scenarios, there are like pre-qual business valuations that are ordered prior to underwriting,
Mm.
and
Is
so
that
like
common?
it's
I
it's
wouldn't
not
say it's
as
common.
yeah,
Yeah, it
it's
happens
just
a little bit at a
unique.
time. And I would say I've done it maybe once or twice. And the only couple times that I've done it is when I will do my own down and dirty business valuation. I've got
Mhm.
like a three-pronged business valuation checkpoint that I do. I use a discount method, I use a multiple method, and then I do a present value of future cash flow method. And I've got spreadsheets, of course, my spreadsheets that are kind of already set up to be able to do this. And then I take an average of both or I weight it, and if you're buying a business for like 3.5 million and I'm all teetering here between 2 and 2.5 million, something's not adding up. So I'll
Mhm.
usually get a business valuation at term sheet acceptance. All right, we'll do this loan. We can make cash flow work, but for some reason, I'm just not getting the value there. But quite
Yeah.
honestly, if on most businesses, if you're able to cash flow around 1.3 or 1.5 times, the value will generally come in. It's that barometer when you're right around 1.2, 1.21, and the numbers aren't adding up. I'll get it ahead of time just to make sure we've got something to work with.
Hmm.
And now, Ryan, what well, this is a kind of like a two-part question. What does it look like when the lenders engage Peak? Because we talked about the process in which we start pulling business valuations. And then what type of equipment and parts of the business do you appraise?
Yeah. So normally valuation process, kind of start to finish, when it comes to once we're engaged by the bank, really it's going over the initial documents received to understand kind of what we're missing, as well as kind of what inconsistencies as we go through the financial data do we see, and what are the key components that are going to kind of move the needle, as well as like, do we understand the business operation? So we just start compiling a list of questions. And once we compile that list of questions with respect to the documents, we kind of look through, especially if underwriting has taken place, we go through the credit memo to see if any of those questions have been addressed by the underwriter. And if they haven't been addressed, or they've been addressed and the answer isn't clear enough to provide us with kind of supportable direction, we then reach out to the contact provided by the bank. In most cases, it's the borrower. In others, it's the broker or the seller. And so we kind of have what we call more of a management interview with whoever the primary contact is, to see if we could get those questions addressed, or identify who the primary party is that can address those. And once we receive the responses, we go through them. Sometimes they bring up more questions where you found something that everyone overlooked. And it's like, oh, we should probably present this to the bank. So in those instances, we send it directly to the bank to get the underwriter involved, so that we can get more commentary on their end to see if they dug into that. But ultimately, once we have all of our questions addressed, like, we have part of our team on the back end kind of performing the research, looking at the market comparable transactions, kind of building out the income approach and the cash flow models. And everything all comes together, and we've finished the model, write a report, deliver it to the bank. And that's normally the process. When it comes to other assets that we appraise, like fixed assets is one of the primary components, just from a collateral standpoint. Not every bank will take a position using the fixed assets from a collateral basis, and they don't necessarily need a fixed asset appraisal. But when we do a fixed asset appraisal, really we have a kind of checklist of all the information we need in relation to, like, let's go with vehicles. Vehicles are easy, because you could go make, model, mileage, repair and condition, as well as original cost basis and the year it was purchased. And essentially, once we have that information, we could perform our desktop appraisal and research. And in some instances, there are certain banks that require on-site inspections for every equipment appraisal. And so we go out there to basically certify and verify that that vehicle does exist, that what they're presenting from an odometer standpoint matches up, VIN number matches up, the condition of the vehicle is what has been presented to us prior. And then we just take that data and incorporate it into what we already received to perform the appraisal. So those are the primary components: business valuation and fixed assets, that we primarily deal with.
You said VIN number, and it just jogged my memory of when Kroge went on site and they were messing with the boats. Remember,
Oh
they were
yeah,
like, they were
yeah. The
like, you went to go
registration
see
numbers. Yes.
how many boats they actually had, and they were like swapping the VIN number and like acting like they had more boats than they did.
Yeah, we were doing an inventory, a site visit, inventory audit, and it was a boat dealership and recreational vehicle dealership, and I was a lender at the time. I was a junior lender, and I was with the lender, and he's marking off the VINs, looking at them as they're bringing the boats around. Well, they're just taking the plate off of one boat and putting it on the other, because they only sold two types of boats, so they all looked alike, right? They were all almost identical. And so we found out that they had a major inventory issue, and yeah, we ended up having to shut them down.
Oh.
Yeah, that was fun.
That's
But Ryan,
bonkers.
I got to ask you a question. So you do a lot of business valuations. That's been like your key to your business. You started that back in
Mhm.
2018, but you do a lot of quality of earnings now. Quality of earnings is like the new hotness, and
Hut
I
Yeah.
absolutely love it. I love how available quality of earnings professionals are. And this is why, from a lending perspective, I've been doing this a long time. And over the last 5 years, I've seen a significant amount of businesses for sale, but not just businesses for sale with.
For years, SBA lenders have relied on referral sources because, let's be honest, reaching businesses directly is just not how the industry worked. It was too hard to find the right contact info, and when you did, actually getting them to engage felt impossible. When Ray first heard about this, he was skeptical because he gets pitched every single day. But 15 minutes into this demo, he realized something. This could actually work. Resquared lets you reach local business owners at scale in a way that actually works. Ray's been using it for a few months now, and not only is it effective, but it's kind of fun. In just a few minutes a week, he's sending targeted messages to small business owners and getting real conversations started. Like the childcare owner he connected with that was looking to buy their second location with an SBA loan. If you ever considered connecting with small business owners and didn't have the right tool to do it, this is it. Resquared is offering a discount just for BDO Show listeners. So go ahead and schedule your demo today, and we'll leave a link in the show notes for you below.
Elevated numbers. All right. And what
Mm-hmm.
I mean by elevated numbers, I mean their cash flow seems suspect, their margin seems suspect because of significant amount of add backs, right? Like I just put in a brand new $200,000 landscaping job in my backyard. I wrote it through the company. Basically, anybody and everybody is committing IRS tax fraud, and they're just talking like it's no big deal, right? And they want to sell their company based on those seller discretionary earnings. And
Mm-hmm.
we as bankers, we were looking at it and just kind of shaking our head like, no, you're hiding these in the cost of goods sold. I can't use them. I can't pull them out. I can't extrapolate this data, analyze it, and say, yeah, we're adding this back and that back. So the deal falls apart and most people walk away. But with these quality of earnings, with you and others being able to go in, extrapolate the raw data, analyze it, and be able to bifurcate exactly what's being run through the business and smooth out those numbers to show what the true cash flow is, that is
Mm-hmm.
huge for lenders like us. It also opens up segments for carve outs too in businesses, which I
Yep.
absolutely love. So, talk to us a little bit about the Q of E world and how that's changed your business model as well.
Yeah. So everyone knows that the primary difficulty with any business always comes down to the level of quality of the financials. And ultimately, every small business pretty much has poor financials, especially those that do annual bookkeeping instead of monthly bookkeeping. And
Right,
so quality of earnings is fun from the perspective of like one of the first exercises that is usually performed is what's called a proof of cash exercise or a cash to like you're looking at the bank statements. So you're looking at the bank statements, what cash goes in, what cash goes out, and you're kind of comparing it to the actual P&L that's company prepared for the monthly period or the annual period, and you're just seeing, is there any material difference between revenue and what we basically recreate and build just by bank statements? And if there's a
right,
material difference from a revenue perspective or from the perspective of kind of expenses, like ultimately you should question and probably move away from that deal just because how are they going to reconcile the material difference? And it really comes down to business owners using their company bank accounts as piggy banks. And so they'll run that landscaping job through the company bank account, but they won't have a category or reconciliation on the actual P&L if they're using QuickBooks. And so you're like,
right,
what's happening here? So like quality of earnings has been huge because ultimately now we're able to spend like normally for a business valuation, spending anywhere from 10 to 20 hours, depending on the company and the company type in kind of financial analysis. A quality of earnings, you're able to get more granular because now you're digging into the general ledgers and the trial balances of the company. And you're basically reassessing and building the financials and making any necessary adjustments that are supportable beyond just add back verification to, hey, like relative to the industry, this expense should normally be XYZ, but because of events that they've undertaken, it's this, but really it should be this, because that's not just like it was an individual who made a poor decision. So quality of earnings help there. The one issue is banks underwrite off tax returns. Quality of
Right.
earnings are based off of company prepared financials.
And
And
based off of
so,
the bank statements too, which is what I love. Because
y-
what I've
yeah.
realized is people don't care about lying to the IRS. They will lie, cheat, steal, whatever they want to the IRS to save themselves a buck.
Yeah.
And I love my business brokers. Absolutely love my business brokers. About 90% of what I do, I get a referral from a business broker. But let's not get it twisted. It's a very competitive field out there. And a lot
Hmm.
of them, in order to be able to get listing business, are pumping these numbers up. Let's say you've got a plumbing company, you've got a plumber, and you're a business broker, and he says, "Here's my financials." And he's taking it to three different, very well known business brokers and says, "What are you going to list it to?" He's going to
Hmm.
take whoever thinks they can list it for the highest amount and most value money. So they are pulling as much as they can out of the business to get a real high SDE, but it's unsubstantiated. It's
That will ripple
unfound.
effect later, though, right? That won't be
Oh,
good.
it'll be found out later. But
Yeah.
again, a lot of the business brokers that I don't do a lot of business with, because I'll usually decline that deal when it comes to me saying you're way off on your numbers. They're trying to get
Hmm.
seller financing involved anyway. They're not going
Yeah.
the SBA route. They're not going the bank route because they know a bank's going to see through this, cut it up, and kill the deal. They're trying to get it financed through owner's equity, through owner's an owner note. So those are the ones that I try to stay away from. But on these larger deals, like I said, I do a lot of contractors. So it's awesome that
Mm.
you own a plumbing company because so you see the numbers, you see the industry averages, you know what a plumbing company can do, and so do I. So when I see something that's off, it's like, you're going to need to get a Q of E on this. There's something not shaking out here that's not right. There's
Hmm.
something going on between these numbers. He's lying to the IRS. He's saying that he's doing his Aunt Matilda's plumbing. That's in there. That shouldn't count. He's doing the landscaping on his daughter's house. That's in there. That shouldn't count. Pull it all out, and all of a sudden you got this ridiculous SDE. I'm sitting here calculating it, pulling the numbers I know I can pull out, and it's about half that. There's a huge disconnect. Either this guy's never going to sell this business, or someone's going to, get lied to and be taken for a ride. So being able to have a professional come in and do a true QRE is going to bridge that gap. They're going to be able to
Hmm.
say, no, I have all the receipts and see where it came out of the bank account when he did his daughter's landscaping. So that's a true add back. Awesome. Now it makes sense. Now we have some qualitative method of being able to justify the cash flow.
Yeah. And another aspect of a quality of earnings that's great. Like we do it in the business valuation, but quality of earnings are kind of focusing a lot on the risk aspects of the
Mhm.
financials, where they start digging into like the employees and kind of their wages as well as tenure. And so especially with contracting businesses, you can look at like digging into employees is key, because you want to
Yes,
know
it's
like
huge.
one, how are they paying them?
Right.
Who actually is being paid appropriately? Who's not
And
being
who's
paid
working?
appropriately?
Who's actually working there? Yeah.
Yep.
I have a deal right now that I'm working with, and it's a window manufacturer. I won't say where or any more detail than that, but I've got a buyer, very well qualified buyer, and the seller's saying, well, you can add my salary back as you're going to take my position over. Okay, makes sense. Well, you can add my two sons back and my daughters back because they don't do anything in the business. That's a lot to
What?
add back. That only leaves like three other people in key positions on this pretty large
They probably
company.
got their
That doesn't
dog
make
on
any sense.
payroll too.
Yeah. So
Hmm.
I encouraged them. They had a Q of E company already lined up. I encouraged them to get one. They got one, and they found out. I'm like that they're going to have to replace. Those are three key individuals. You can't add those salaries back. You got to replace them, and they're getting
Mm-hmm.
Yep.
paid undervalued too. All right. He was underpaying his two sons and he was underpaying his daughter. If you're going to replace them, I think it was like a 15% increase in salary was the market for buying it. It dramatically reduced SDE, dramatically
Yep.
reduced the value. And now they're back to the drawing board trying to put something together.
Yep.
So that's important, man. And that's why I've started over the last 5 years really falling in love with quality of earnings. And and the deals that don't pass the sniff test, right? Like I could dive into a liquor store, a gas station, or a car wash, and I could tell you exactly what they're doing in there. I'll never need a Q of V on one of those. But I'm going into something manufacturing that doesn't look right. The numbers aren't adding up, or the SDE is just kind of way off a base. I'm recommending a Q of V on that every single time. And sometimes we've required it. When it just doesn't look right, we'll require a Q of V before we even take it to underwriting to make sure that these numbers are sound. Because if these numbers are sound, then when it comes to you, Ryan, and you got to do the business valuation, it makes more sense.
Yeah, well, and one of the things that we've learned too in performing QVs is we have a very large list of information that we need to even begin on a QOV. And if
Mhm.
they can't even meet, kind of like a due diligence checklist, if you're buying a
Mhm.
business, if they can't even provide the information you're requesting, it should be an automatic red flag. Like, why are you looking at this business? Because these aren't abnormal requests.
Right.
These are, you go into QuickBooks, you change criteria, and you print to Excel, and you have the file, or you go to your bank accounts, and this is where you find out, oh, you have more than one bank account. Like, what games are you playing? Yeah, it's fun. It's like being a true detective when
It is,
performing
and
QVs.
we've got an equal balance here for the first time. We've got a significant amount of business sellers, and I mean significant. I'm getting transactions coming across my desk 10 times a day, and I'm not even over exaggerating. And obviously, I'm not doing all of them. I wish I could, but that's how. And I'm just one BDO, right? Imagine we've got
Hmm.
thousands of BDOs across the country seeing 10 deals come across their desk a day. It's unbelievable the amount of businesses that are out there for sale. But we've also got an equal amount of buyers that are looking at these too. So we've got a lot of sellers that are fighting for these same buyers. And so they're
Hmm.
trying to maximize their retirement. They need to maximize how much money that they're going to make. Because I will tell you another thing that I've learned in my 26 years of lending. Nobody sells the cash cow. Nobody sells the business that is just printing cash. If this got an SDE that's too good to be true, more than likely it is because nobody sells that business. They will stay there
Hmm.
until they're 80, 85 years old, just cranking that money out because nobody wants to take a check and walk away on the egg, the goose that lays the golden egg. I know that I mean, this boomer generation, they'll work there until they're 90 until they're ready to just take one foot into the grave. They will
Yep.
do that if that thing is cash flowing. So be buyer beware, get that Q of E, make sure the numbers make sense. And sellers, get one yourself. Make sure you understand what you're selling and that you're putting a good SDE number for a quick and accurate. And even if you get a quick and accurate sell, you'll have people fighting over your business. All right. It'll
Hmm.
sell itself if you've got an accurate SDE number.
Yep. Oh, and a word of caution for buyers and sellers, never go 50-50 on a QOV between buyer and seller. It can backfire instantly.
Why?
We
Explain that.
Yeah, so we did a QOV last year. So the buyer reached out to us and wanted a QOV for a manufacturing company for like cabinet manufacturing. And
Oh, okay.
the individual was like, I don't want to pay the full fee. Can I have the seller pay half the fee? And it comes down to, you do realize that the seller now becomes our client too. So everything is openly communicated between both of you.
Right.
We send the QOV to both of you. And
Conflict of interest.
yes, but at the same time, the guy had the perfect deal in terms. And as soon as we did the QOV, our SDE actually came in higher than what was
Oh,
previously being
and so
documented.
you had to give that to the seller. He's like, my SDE is higher. I'm bumping this up another $1 million. I know what company you're talking about because I looked at that too. Two of us at this bank looked at that. I know exactly what you're talking about because the first BDO who looked at it, it was at one price. I'm like, oh, this is a slam dunk. This is easy. I see the
Yeah.
Q of V, and all of a sudden they're like, oh no, we're not selling it at that price anymore. It's now 6.5. When it was
Yep.
originally 5, I'm like, oh my goodness. Well,
And
that's
and
a,
they
that's
and
that's
they
a little
sold
different.
it. Yep.
They
Oh,
did.
I
Yeah.
felt so bad for the buyer because I
Yeah.
pre-warned the buyer, like, it could go the other way, which is great for the
Right.
buyer, but it could also go up. So it's kind of like when buyers and sellers want to split the business valuation cost, like
Right.
which
Yeah.
still doesn't make
But
sense to me
beware.
because buyer
Yeah.
beware. Yep.
Yeah. That is some great advice. It is expensive, but it can save you in my case that I saw $1.5 million on the
Yep.
valuation of that company for the buyer had to fork
Yep.
up. That
I love that you knew what
unbelievable.
he was talking about. That's
I
amazing.
knew exactly what he was talking
It's
about.
a small
Exactly what
world.
deal.
It's a
Yeah.
small world we live in.
It
What other pieces of
really is.
advice? What other pieces of advice can you give for the business owners who are preparing to have their businesses valued, especially with the current trends or changes in industry and kind of where our economic downturns are coming into play? Like, what kind of advice do you have?
It all comes down to understanding where your financials are and just have it dialed in that if you're looking to sell particularly, like knowing your numbers on a monthly basis and being able to address questions related to revenue or work in progress, like what's your accrual or potential invoice, like just knowing what revenue is as well as your expenses, especially with tariffs. Like a lot of
Mhm.
suppliers have been addressing and openly communicating with who they work with and supply goods to
Good.
as to, okay, we're increasing cost here. And so far it hasn't been too bad. Like I just got off a call with an individual out in the Northeast, we'll just say Northeast, who owns a
We can't
window
really narrow it down
supplies.
because we know everybody.
Yeah, pretty much.
Right.
But like it's a window supplies building materials company. And like first question out of the gate, we chatted about tariffs. And she's like, well, prices increased 2% here, 3% here. But overall, like a lot of our suppliers manufacture their goods already in the States. So, and everyone's just figuring out different ways. So it's understanding just how your expenses are being impacted by the current economic environment, but
Right.
also understanding your customers and how they are going to react. So as a seller, like really the easiest thing to do if you want to sell is just have clean books, take all personal expenses out of it, because a dollar spent today to save 40% in taxes is a dumb investment. When that dollar you multiply it by 3 is 3. And yeah, so much more added value if you stop running personal expenses if you want to sell in 2 years. Um,
Thank you.
and just
Thank you for
and,
that one, Ryan.
and really just knowing your numbers. My favorite thing to do when I get about 30 to 40 inbound leads just asking me about, hey, what are your valuation services? And every time first question, what's the revenue of your company? No one really knows that answer, which
Know
just
the answer,
baffles me.
folks.
And so like understanding your financials, where you are, allows you to better talk to a potential buyer, because your buyers are going to be first fixated on the financials
Right.
before they start getting into legal due diligence, employee due diligence. Like if you can't talk on numbers, it's very hard to sell a business.
Yeah. I was going to ask, will Peak be affected at all by any of these SOP changes?
No, I think it's actually going to be great because I feel like we're rolling back to the period where we had really strong borrowers.
Yes. That's what
And
I'm talking
it's
about.
like, I
And we can
remember,
end the episode now.
yeah, no, we really could,
It's
because like there's so many sellers, a lot of buyers. Having stronger borrowers makes for better loans.
hmm
And
yes.
ultimately, when
One
we're
plus one is
in,
two.
yeah, and those borrowers, because they're already stronger candidates, they're also going to be better at due diligence. They're actually going to know about the
Yes.
company they're buying. So when we call them from a business valuation perspective, they're like, "Oh, like I can answer this question because I already know the answer." So I think it's gonna be great. I'm actually really excited for it because we talk with countless borrowers
See,
every
Ryan,
day.
you're on the same page as me. So when Sterling, Chris, and Al watched this episode, I was like, it was like me versus
They're going to
them.
have some things to
This,
say next
this
week.
was the exact reason why I love the new changes in the SOP.
Yep.
Bringing back 10% equity, making it
Yep.
more difficult for buyers to buy with less money down. It brings stronger buyers. It makes a stronger deal. It makes it more solidified, more sophisticated buyers. I love it. You hit all the points. This is great. I should have had you on the episode
A
talking
new
with these
friendship
guys,
has been
man.
forged. You guys are going to
Yeah,
be calling
well,
each other like, hey.
We've been friends. You can't separate the Ryans, all right? We've already been friends. He's already my guy.
well, and I think the other thing too with it is because you have so many sellers, now you're introducing more stricter, like financing is becoming more constricted to some degree,
Mhm.
which means there's going to be fewer buyers, which should actually drop valuations as a result,
Interesting.
because you don't have as many buyers kind of competing on the same deal. Because if you can't qualify for SBA, where are you going to get your financing?
That's a good point.
Because
That's a really good point. So it's going to force buyers to, I mean, sellers, it's going to force sellers to put their prices and put their businesses into the box with SBA.
Yep. Well, and I thought that would happen with interest rates going up the last couple of years, and it didn't work. So that's just Ryan's theory.
Right. Well, we're just waiting for the SBA to increase the loan
The
limits
cap.
from 5 million. Oh yeah, the cap. Because right
Yep.
now, adjusted to when they first did $5 million, adjusted today by today's inflation, I think you're at about 7.4 million. So it should be 8 million or higher. So hopefully the government will get it together and increase us, so we'll be able to do bigger transactions, and people won't be too strapped for seller notes or other type of creative financing. And real quick, Ryan, if anybody wants to get a hold of you for a Q of E feasibility study, business valuation, what's the best way to get a hold of you?
You could call 435-359-2684, or you could just email me at the most complicated long email, ryan@peakbusinessvaluation.com.
Valuation or valuations?
Valuation. Oh, it's very
Value.
complicated.
Singular.
It's
Singular.
singular. All right.
And they always
We'll
spell
link
peak
it. We'll
wrong.
link it in the show notes for everybody.
We'll link
they'll
it in
know.
the show for everybody. Yeah.
Yeah.
Okay, that works.
All right.
Thanks, Al.
Ryan, thank you so much for being on the episode today. That was awesome, especially, and a huge thank you to being a sponsor of the show. We really love all of our people that want to lift us up and keep us going. So, all right, everybody, thank you for listening. Go ahead and subscribe. Send your topics and suggestions to the BDO Show at artofsba.com, and we will see you next time.